Welcome back to the Kelowna Real Estate Podcast. I'm your mortgage broker host, Taylor Atkinson.
And I'm your real estate agent host, Matt Glenn. What's shaking?
Hey, today we had on Spencer Harris from Peakhill Capital. These guys are expanding quickly all over North America, but we really wanted to dive into CMHC lending, specifically on purpose-built rental, MLI Select. Very hot topic, right? With a lot of these purpose-built rentals going up right now, but longer amortization, insured, cheaper rates, lower loan to value. So, or I should say higher. It's a really cool product that's been around for a little bit now. And these guys are a lender that really utilize it. So,
and the MLI Select is largely what's financing all the purpose-built rentals around Kelowna, right? Like a major portion of them.
Pretty much. You could still finance it conventionally, but
it's what makes these projects pencil.
Yeah, it's the big catalyst that's really like encouraged people to go that way, or developers to go that way, is because CMHC provides this really good product that helps you get some cash flow out of something that would not if it was conventional.
Yeah, great to talk to Spencer. Obviously, wealth of knowledge. It was awesome.
Yeah. So I think you can reach out to him, his team, go through a commercial broker to use them, whatever, but they do bridge financing for these type of stuff too, construction financing. So, and to tie it all together, when we had Justin Smith on about 15 episodes ago, he researched all the mortgage funds that, he was investing with his portfolio of investors. This was one of his top two. So pretty cool.
Yeah. Safe moneymaker. So,
yeah.
All right. This episode, like every episode, is sponsored by Century 21 Assurance Realty, best brokerage in town, best brokerage in BC, the interior anyway. We're growing. We're everywhere. A brokerage that kind of helps each other out. So if you're an agent, maybe a little bit lonely or looking for a change, give us a call. We're ready to grow. So give us a call.
You're going to get a lot of lonely agents calling you.
Yeah.
Hey, Matt, I'm lonely.
But do not call past 9 p.m.
Yeah, that's bedtime.
Yeah.
Hey, if you are lonely, we have a wicked opportunity. Even if you're not lonely, if you just want to, get around some people that have some high energy, top producers, network a little bit, learn a lot. We brought on Alex McFadden because we wanted to, promote what he's doing coming April. He's putting on an awesome event. Matt and I are going to go to it. Next little segment is us just having a chat with Alex. If you want to get tickets, like you said in this blurb, send us a note, DM us, and we'll get you a promo code for it.
Yeah, give us a promo code, give us some cred. I don't think we get anything out of this, but just nice to know to track the analytics.
Oh, yeah. Yeah. It'd be really hard.
We're huge analytic trackers around here.
Hey, Matt, how many DMs do you got? I got, yeah.
Exactly.
I need a spreadsheet. Okay.
Enjoy the show, you guys.
Okay, Alex McFadden, thanks for coming on the Mortgage Pug. How's it going, buddy?
Welcome back to me, I guess.
Yeah.
I'm doing great. I'm doing great.
Big event coming up. What can you tell us about it?
Coming up real hot, real quick here. April 3rd, Kelowna's first real estate business and marketing event that I know of. I don't think there's ever been any of them. We're flying in speakers from New Orleans, from Reno, Nevada, Las Vegas. We got people coming from all the way out in Vancouver, a couple people from Calgary and Toronto, all to speak and hang out in Kelowna, which I'm super stoked about. So it's going to be a lot of fun.
Awesome.
So what time does this event start?
All day, baby. You got to be there from start to finish. Best believe we'll be running up the mountain at 6 a.m., 8 a.m., 6 a.m. No, so the event itself, it's a full day event, 9 to 4, and we're doing an after party at Pretty Not Bad with our friend Casey, who's hosting, which is going to be fantastic, and we're excited for that part. But the idea here with this event is I wanted to bring in people who I've met or I've seen speak personally that have had a specific impact on my business, marketing, or communication into the town of Kelowna. I haven't seen an event like this put on, and I wanted to do something for the real estate community and really just open it up to people to expand their marketing, their business, and different opportunities. And the neat thing is it's not just for realtors, like it's real estate, mortgage, finance, insurance, builders. We got all sorts of people that are going to be coming to this.
So should it mostly be professionals in the industry, or like who should be coming to this?
Yeah. Well, exactly what I said. I think our primary focus was to positively impact people who are around or in the real estate community in some way, shape, or form. So that could be finance, real estate, or building. And so the key at the end of the day is if you have a small business and or you're related to any of these industries in any way, then you're going to have success. We do have speakers who are in the real estate community who are going to be focusing an element on that. And we have speakers who are not in the real estate community who are going to share their gifts with us that could affect anyone as it relates to marketing, communication, teams, all that kind of fun stuff.
I love it. And where can people get tickets?
Online. Hopefully you guys have a link on your page right here. So if you follow me at the Mortgage Pug, you've got the ability to get tickets on there on Eventbrite. Super easy to get them in there. We got 30% sold in the first 2 days, which I'm really excited about. I'm going to give you guys a promo code. So any listeners of the podcast will get a discount if they stick in the promo code, and prices are going to go up every 10 days until the last day where they're going to be $300 and hopefully get them before that.
Do people reach out to us for the promo code, or how do they get it from you?
Yeah, get people to DM you guys directly or DM me and just say Kelowna Real Estate Podcast, and I'll send the link their way.
I love it, man. Awesome. Well, thank you for putting this on, and Matt and I will be there. We're stoked for it.
Yeah, this is going to be unreal, man. I'm excited to blow away Kelowna, and I'm hoping this is the first of many events just like this. So thanks, guys. Appreciate you.
Okay.
Thank you.
We'll see you there. Okay. Welcome to the show, Spencer. Thanks for joining us, buddy.
Thanks, Taylor. Appreciate you having me. Nice to meet you, Matt. We haven't met yet.
Definitely.
Yeah, we kind of like to start our show with just what's your perfect Friday? You know, what makes you productive, and what do you do for work? And then kind of what do you do for fun going into the weekend?
Sure. I tend to be an early riser, kind of wake up with the sunrise. You know, that might be sleeping in a little later in the winter, but
I was going to say it fluctuates.
it does. It really does. I'm not joking. You know, I might sleep until 8 o'clock sometimes in the winter, but in the summer, it's definitely a 5 a.m. wake up call.
Yeah, nice.
And to be honest, a lot of the time it's a shower and then right to work at the home office. So just sort of the nature of our business. I do kind of like it though, because I do line up with Toronto time for my workday generally. Most of our office is based out of Toronto, and it's kind of nice to be able to get a hold of people when you need to sort of early in the morning. But other than that, I do try to get out with my wife to walk the dog in the morning as well. And then if it's a Friday, you know, I try to, you know, hopefully line up some work meetings during the day. Ideally go golfing sometime late afternoon.
Nice.
In the winter months, it might be more like going to the gym. But I grew up playing competitive golf and still do a little bit. So
I was going to invite you to come golfing with us, but nope.
I know, so was I.
I know I haven't got the invite yet.
Yeah.
You know, so
Well, yeah, Matt and I are competitive, just not with competitive people.
sure. I gotcha. I play with anyone, but yeah, so might be playing a sort of a local golf tournament or, you know, kind of doing all the classic Okanagan things. So definitely like to go boating, like to go to the wineries, and like to hit the ski slopes as well.
Nice.
Awesome.
Well, yeah, waking up early. I've been trying to use this alarm clock that, you know, it's like one of those sun alarm clocks. Been trying to use it for like 3 years. I just can't figure out how to program
the
it.
sun alarm clock. I do.
But that would be my recommendation. Yeah.
Yeah, my wife has one as well, but I don't know. I just, for some reason, I just wake up with the sun every day.
Yeah. Nice.
Yeah. Well, let's talk about Peakhill. So you guys are a pretty big lender, and you seem to be gaining a lot of traction recently. And actually, Justin Smith, who we had on a few months ago, he was talking about basically he analyzed and vetted a bunch of lenders, and you were one of the top choices, which coincidentally, you know, you and I have kind of met about a year ago or a year and a half ago, and we were kind of chatting about coming on the show anyway. So it worked out really well. But yeah, give us the elevator pitch on Peakhill.
Yeah, it's always nice to hear people talk nicely about us. Our firm's, you know, fairly new to especially Western Canada. Peakhill's only about 6 years old. And yeah, we're an investment manager running funds for credit and equity throughout Canada and the United States. Our Canadian debt business is one of the largest CMHC lenders in Canada for both term and construction. In 2024, we funded about almost 900 deals across Canada, loan sizes ranging from 2 million to 200 million. And we're also a conventional lender, funding bridge and term loans on all asset classes. You know, those might be industrial deals, some grocery anchored retail deals as well. We've now grown to a team of over 100 team members across the country and in the US. So we've had some pretty rapid expansion, especially in 2024. We've got physical offices in Toronto and Montreal, and soon to be out west as well. We have an equity business that's also focused on multifamily JV deals, both in Canada and the United States. You know, we're having a lot of success in local markets as well. So, you know, I don't think when Harley Gold, our managing director, you know, was looking to add a body out west last year, I don't think Kelowna was sort of top of mind maybe, but I got in his ear, showed him, you know, all the projects that were happening in Kelowna at the time, and
showed him our podcast.
Showed him your podcast, you know, like
Yeah.
It was a pretty easy sell after that.
Nice. Yeah, we do what we can around here.
Yeah. So
Yeah,
yeah,
that's
obviously
awesome.
with the amount of construction happening in Kelowna, so much of that is CMHC business as well, that it's pretty nice to be on the ground here and not have myself be in a big office tower in Toronto and get to have boots on the ground.
Can I ask one question before we dive into this? Is since you're in the US and Canada, does the US have like a similar to CMHC program?
They do, yeah, they do. But some of our team members have some experience in that world, especially Harley.
Yeah.
But yeah, our focus is definitely on the debt side, is on the CMHC business in Canada.
Yeah, okay.
We're just starting to get into the debt business in the United States.
And you guys do construction, bridge, and like long-term MLI Select.
Yeah, so funding. We're doing term construction and bridge deals. So again, on all asset classes. So, most of our business, probably, 80 to 90% is CMHC business, mostly term deals. Again, some construction as well. The construction side is definitely where we have the most opportunity going forward, especially in Western Canada. We have team members in all different areas of Western Canada now. We just brought someone on in Edmonton. Actually, just brought someone on in Halifax as well. So a little bit smaller market like Kelowna. It's really nice to be able to have local expertise in all these different markets. Obviously we've had people in Vancouver and Calgary for a while. Again, Montreal and Toronto, but it's nice to get a little more granular, go to events like UDI where you get to kind of meet the people. I really like Kelowna from the business world here. I think it's very easy to connect with people. Everyone's kind of, 1.5 degrees of separation apart. It's been nice to be known for what we do here.
That's awesome. You kind of got me excited with how you guys are growing now. Maybe I could get a job in Kelowna and you could be West Kelowna. I don't know. Well,
sure. Yeah. We'll see. We'll talk it out here.
Okay.
All right, Spencer. A high level question to start this conversation. What is CMHC financing?
Sure. So the Canada Mortgage and Housing Corporation, CMHC, is a government-owned corporation that manages Canada's housing supply. CMHC's mission is to make Canada's housing more affordable and accessible to all Canadians. They're the only provider of loan insurance for multi-unit residential properties in Canada. And so CMHC supports the construction, purchase, and refinancing of a variety of multi-unit rental properties. Anything that we do is 5+ units. So what they offer is a certificate of insurance that is a document issued by the Canada Mortgage and Housing Corporation. Basically acts as a mortgage loan insured by CMHC, meaning the lender is protected against financial losses if the borrower defaults on their payments. So generally, they're not putting down a lot of money to access this program, as little as 5%. So there's huge advantages to the program. And what this certificate of insurance does is it protects the lenders who are issuing the money for those loans.
I guess to oversimplify it, there is, what most general public would be aware of as, insured mortgages on residential houses with less than 20% down. Similar process where, the borrower has to pay for that insurance, right? So much like on these 5 units and above, the borrower would still pay for that insurance premium, but then in return would get a superior rate, longer amortizations, less down payment. Like there's a lot of benefits to kind of justify the cost of that insurance premium, right?
You've got it. Yeah, exactly. So, with the MLI Select program in particular, they can go up to 95% loan to value or loan to cost, up to 50-year amortizations, as long as, you get things like debt servicing at a minimum of 1.1. So there's huge advantages to the programs. They've had to adjust a little bit over time here. The program's not even 3 years old yet, but most developers and even, retail investors are going that way and seeing the benefits going forward.
Kind of an odd question, but like the market is a bit soft right now. This is kind of like the only way that these projects pencil. But when the market heats up or like things get more in line, will this still be a preferred product for builders going forward?
Yeah, it's a little bit market dependent, both on the construction side and the term side. For the MLI Select program in particular, we can talk about. Yeah. Basically, there's 3 ways to access the program. It's through affordability, accessibility, energy efficiency. So often in markets like the prairies, we're getting a lot of the MLI Select points. Basically, accumulate 100 points is the goal, and then you can get up to those 50-year amortizations. In prairies, you'll see a lot more people going on the affordability route just because the numbers make sense more there. Here, traditionally, they've been shooting more for the energy efficiency side. You get up to your 100 points there. Last year, they bumped the energy efficiency back to 50 points, which, in turn made developers having to, either excess points from accessibility or more likely from the affordability side.
What is accessibility? Like, is that just elevators? Like, I was trying to figure out how this works because all the buildings in Kelowna are all high density, 3 or 4 stories. Like, is it just elevators? Like, obviously, they do not walkout ranchers.
Yeah, there's more than that to it. I believe it's the Rick Hansen Foundation that's sort of the governing body for that. I wish we saw more on the accessibility side. I don't want to say it's rare, but we don't see enough of it for sure on the accessibility side yet. And it would be nice if developers were incentivized more to go the accessibility route for points.
I feel like we're definitely going to see the accessibility side, whether developers want it or not, though, right? Like building codes changed where we essentially have to have that accessibility model. So does that not align now with the MLI?
Yeah, it's aligning better. And I think in some provinces it's aligning better. We just generally still don't see enough of it so far. Yeah.
Yeah. And then affordability is based on CMHC's data, right? And that gets
it's
reviewed.
based on the median renter income. So it's not just the median income of everyone, it's just median renter income. So it's based on 2019 statistics right now, probably waiting for an update soon. But I believe for Kelowna, the max renter income to qualify for affordability is $1,188 per month. So any units that have to be dedicated to affordability for 10 plus years would have to be at $1,188 per month or lower. Those median renter incomes are different for every city throughout Canada. That's all made publicly available on CMHC's website.
Yeah, developers kind of get a bad name sometimes, but I think this program specifically, like why it's designed this way, is to put units on the market that are affordable, efficient, accessible. Like it's a government program that's driven, right, to basically solve one of the housing issues we have. So any developers that are using this shouldn't be like, oh, they're big bad developers. They're playing by the rules to provide an asset that's desperately needed right now. So
absolutely, yeah. I mean, the whole idea is to put more affordable units on the market, get people in quality housing. So I think the developers who definitely see the best results are developers who are building very quality units with an affordability component, hopefully. Again, it's a little harder to make work in BC on the affordability side sometimes, but definitely throughout the prairies, we see a lot of great buildings being built with affordability components.
$1,188. Is that like a few units have to be allocated for that, or all of them have to be at that?
Yeah, so you have to dedicate a certain number of units to achieve a certain number of points. So based on whether it's new construction or an existing building, where you can get those points allocated. So obviously, when developers are working with their pro formas, they have to sort of see how many units they can dedicate to something to still make it pencil, right?
Yeah, because like that seems like very hard to pencil.
Yeah, and again, those numbers are based off 2019, so we'll see if there's any updates going forward.
Okay, and then can you kind of fill us in policy changes in the last 6 months? I think it was kind of springtime that they started to come out with some policy adaptations to maybe make the program fit a little bit better or give more opportunity to people.
Yeah, so they made major changes in June and then November as well. So in June last year, they extended new construction amortizations to 50 years from 40 years, which incentivized developers a little bit. That was also when they reduced the energy efficiency component from a maximum of 100 points back to 50 points. Most new construction is qualifying for energy efficiency, and it wasn't maybe incentivizing enough affordability component there. So moving it back to 50 points, hopefully incentivizing either some accessibility or affordability components as well. One other major change that happened in September was approved lenders like Peakhill could previously have lender correspondents, mortgage brokers, who could submit on the lender's behalf. And CMHC decided to take that part away. Now all submissions have to go through lenders like Peakhill. The volume of submissions to the lenders now has gone up dramatically. And I think it's been a bit of a change on the lenders to sort of beef up our teams and make sure that we can do these submissions accordingly and that the quality of the submissions is at the highest we can make them.
Yeah, I'm surprised they made that change. Why did they do that?
I think it was more for quality assurance. When you had different levels of mortgage brokers submitting things to CMHC, again, on the lender's behalf, maybe things always weren't the quality they should be. If everything's coming through the lender, it's all through the same people, it's all the same relationships with CMHC, and hopefully, get those certificates of insurance more quickly.
Has the time frame for you guys turning around been the same, or has it lagged at all with that? Or
With Peakhill, we have a whole team internally now that's dedicated just to CMHC submissions. So we've seen great turnaround times from CMHC lately. There was a bit of a backlog in the last year or two, but yeah, great turnaround times right now. And hopefully going forward, we'll see the same.
so if a developer wanted to access this, would they still call you, Taylor, or you just call up Spencer here?
Yeah, well, I think there's 2 points there. So previously you had to be a designated approved MLI Select broker, right? Now they've taken away that
Lender
requirement.
correspondent, yeah.
Yeah. So it's kind of funny that they took that away, but then everything now has to go through the lender anyways.
Yeah, I mean, any broker can still bring it to the lender, but the lender has to submit now to CMHC. Before, the broker could submit as well. So they could submit directly. Now the whole file has to be submitted through the lender anyways. Again, it's been a good process, and we've got a whole team dedicated to this now. There's, like I said, we did almost 900 loans last year, and those are a lot of files to get through.
Yeah. Well, I guess what sets Peakhill apart from other lenders? Like, where's your guys' niche? Where's your value add?
Like I said, we're an approved CMHC lender. We're dedicated to that program, and that's our expertise. So the goal is to, be one of the largest CMHC lenders in Canada, which we already are, and focus on multifamily. Obviously we don't want to have all our eggs in one basket either. Hence why we also do conventional loans, construction, industrial, and retail as well. We've got an equity division as well now. So, we're definitely spreading out and diversifying what our capabilities are. We're bringing on great people with great experience, again, right across North America. Our equity team in the States has done huge JV deals in places like Miami, New York, I believe Dallas. They're definitely spreading their wings. And, we want to be the best at what we do. We want to be the best CMHC lender and the best, conventional lender across Canada, provide different types of solutions to all different types of developers, whether it's developers that focus on industrial or, strictly multifamily.
Yeah. Kind of to go back to the policy changes, maybe a year ago, I was looking at these programs quite a bit, thinking the restrictive part was that you couldn't, refinance, take the equity and basically do what you want. You had to redeploy it back into real estate, which makes sense for the program, right? They're trying to put units on the market. So a lot of larger developers would, build up these massive portfolios. And then, the only way to basically cash out is sell them off to like a REIT. But since they've changed that recently where, it gives more autonomy for developers to deploy that money, it seems like this program will kind of keep that momentum going. Like it just gives more flexibility. But yeah, have you had much feedback from, I guess, anyone in the industry? Like, has that change been a bit of a catalyst to keep things moving along?
Yeah, I mean, from the lender perspective, we're generally still going to want to see that equity going into more projects. It's always at our discretion at the end if we're going to lend the money on it. So, we want to make sure it's going to something valuable or that at least the story makes sense, right? Why someone's doing something with the money. But, most of these changes they're making have been good and they've been flexible and there's definitely a reason behind them. One of the other changes that was made recently was regarding construction, something called rental achievement holdbacks. So you had a lot of these developers getting MLI Select construction loans up to 95% loan cost. What they've done is they've scaled that back now in certain situations to 75%. And it's based on maybe geographic location, strength of developer, and other factors. But it basically requires the borrowers to achieve a minimum project equity of 25%. And based upon the rental achievement, they can get potentially up to 95% or whatever the certificate of insurance says. So there's a little bit more requirement now on the equity side for these construction projects. We do have solutions to maybe get to higher leverage for some of these developers going forward. We're just starting to see it trickle in now. So this was a recent change. We're just sort of moving where the needle goes, I'd say.
So with the rental holdbacks, like, what are you waiting for, like a vacancy rate, or like what are you looking for there?
Yeah, so basically we're looking for the rental achievement to be met. So they need to reach certain qualifications on lease up and where they can achieve there. So once they reach a certain threshold, the rest of those funds will be distributed. And again, they can get up to whatever they qualified for on the certificate of insurance.
That makes sense to me. Honestly, this is one of the programs that I feel that the changes that they're making are evolving with it, and they're actually pretty good. Where are you guys seeing geographically most of these fundings for you? Like across Canada?
Yeah, I mean, again, like I said, we're right across the country. In terms of lending, we'll go down to $2 million or even $1 million on a term loan. So we see a ton of deals throughout the prairies. You get a lot of, let's call them retail investor. They might just be looking to buy a few apartment buildings or, maybe buy some new stock. And maybe that loan is $2 or $3 million. It qualifies for the MLI Select program. They can potentially get up to their 95% financing on acquisition. So we see a lot of that in the prairies. In the Okanagan, it's a little different story. Obviously, a lot of major developers here. We've seen major developers starting to trickle in, from Vancouver and elsewhere and throughout Alberta. Again, like you said, it's harder to make the numbers work here sometimes. So those people tend to be very good at what they do. And we'll see how things go. I listened to your podcast last week with Jeff Hancock. Probably going to be a rise in vacancy with so many new units coming into the market.
Yeah.
So it'll be interesting to see how developers adapt, whether they sort of stick with the CMHC programs, whether they, go to some conventional financing moving forward, or maybe do they pivot back to some condo projects as well?
Yeah, it's interesting.
Yeah. Yeah, we did talk pretty in depth, and his data on that was wild, but I agree. It looks like there may be some more opportunity to stratify some of these units and do resale. There's also a lot of resale new construction coming online as well.
Well, it's not that was started a few years ago. There's not that many new starts right now. So
no. Yeah. So how do you guys generally fund these? Where's the capital coming from? How does that side of it work?
Sure. So basically, we have various institutional pension funds, pension plans, and family offices as investors. Everything's on our own balance sheet and we manage it. We did about $5.3 billion in loans last year. That's including CMHC loans, bridge loans, and other conventional loans. So we have a whole team dedicated to the investor relations side of it. Yeah, I'm sort of glad I'm not on that side of the business. It's much more fun probably on being on the developer side.
Yeah. I think it'd be kind of fun to go into those meetings and listen, I need $1 billion. This is why.
Matt asks me that question every day.
Yeah.
He's asking you for
Yeah.
Yeah, well, I mean, we did talk about this. We've been talking a lot about this the last little while, but there seems to be either midway through the project or projects that are being finished. And a lot of these kind of land assemblies or, what we talked about a few weeks ago on the show with City of Kelowna, their fast track program, and having that now open up 5 doors and above kind of opens up MLI for the average person.
Yeah.
Obviously, that's a huge piece of the market for you if you're doing loans, on the
Definitely.
lower end of that.
Yeah. And again, that's a lot of what we see in Alberta right now is we see kind of those 5 to 12 units. Maybe you have a builder building them and somebody coming along and say, hey, I'm going to purchase those units, rent them out going forward. I think we'll see a lot more of that in Kelowna here next. And it's nice to have some of those nice infill projects, that look beautiful and people can make them work as investments. It really adds to the quality here in Kelowna. I definitely intend on being in Kelowna for a long time and hopefully raising a family here and such. And, going forward, Kelowna means a lot. I'm from Winnipeg originally too. We do some business there, but those are 2 places that I care deeply about. I'm going back there next week, but it's nice to be passionate about the places where you live as well.
Yeah. It's funny when you talk about this, how the incentive, because for years, last 5-6 years in Kelowna, it's just been all fourplex. And now the zoning allows 5 and 6, which obviously now falls into your kind of
in our bucket. Yeah.
Yeah, exactly. But I wonder if just even 2 lot land assemblies where you build an 8-plex instead of just a 4-plex would be super beneficial for resale.
Yeah, we have a small construction loan program. Generally, we're seeing loan amounts for those above $5 million. We try to keep it.
Yeah.
So they're in that 5 to 15 range. Obviously, we work on large construction right up to $100 million with large developers.
Yeah.
So there's a lot of incentive for small time developers to, build these beautiful units. And about how we're going about financing those, it could be us, it could be, a credit union or somebody else, some other source of capital. But the goal is generally always going to be to achieve CMHC financing on those builds.
Yeah.
And they can certainly come to a lender like us, even if they do the construction with somebody else, they can come to us after and do the term takeout on those loans.
So not to get too specific here, but if a person wanted to go build, let's say, a 10 unit. They have 2 lots. They want to build 10 units. What are they looking at? What do they need to have? A certain amount of down payment, construction experience.
Matt's asking for a friend.
Yeah.
Also, my pen's ready, so go.
Yeah. So yeah, there's basically some basic requirements that I kind of let people know about what's required to at least qualify. First would be a net worth requirement. So to qualify for a CMHC loan, you have to have a 25% net worth requirement.
Okay.
Everything in that net worth has to be validated through bank statements, mortgage statements, etc. I would say the lenders are pretty strict on that about, what's actually qualifies as net worth. So if you've got let's say a $4 million loan, you need $1 million in net worth. Whether it's construction or not, we're probably going to want to see a liquidity requirement as well. Usually that ranges from 10 to 20%. That's just sort of, free cash or accessible cash on hand that obviously if the project has challenges or whatever else comes up, that can be dealt with. So yeah, I mean, a small developer looking to do a project, it could be through CMHC financing, it could be through conventional financing, again, with somebody else. But the goal is generally always to get to the CMHC term takeout and make the numbers pencil there.
Well, that's a big one that's forgotten about a lot when clients come to me, is like the 25% of the mortgage balance. It can be pretty hefty,
You're talking about net worth or liquidity?
That's on the net worth side. Yeah. 25%. Exactly. So another area we've been able to help out a lot too is on the acquisition of existing buildings or even new buildings. So, you might get someone who has a tight close, or maybe you have someone who wants to purchase a building and do some renovations to it, maybe get rents up, then switch it to CMHC financing. So that's where our bridge program comes into effect. Generally, what we're looking to do there is 75% loan to purchase price or loan to cost loans on those acquisitions. And those are, usually 3 to 12 months, and then switch it to the CMHC financing after. Just a short-term solution to acquire the property. The CMHC submission process can take 3 to 6 months. It may be quicker, but it takes some time, right? It's not things that happen right away, and the seller might not be willing to give that amount of time to the buyer to, get their financing in line, right? So we get the bridge loan for them and help them do the CMHC takeout after.
Maybe it's a good transition into some of our wrap-up questions. And this doesn't have to be related to the investor hat, but if you could buy one property in the next 12 months in the Okanagan, what would it be?
Sure. You know what? My wife and I bought, hopefully, maybe our forever home last year in West Kelowna, which was very exciting. And I'd say, pretty content on that side. Obviously, if you live in Kelowna, I'd say generally the dream is to have a place on the lake. But in terms of investment, I don't know. Being on the lending side, this is what I do for a living. I leave the investors to do the investing, I'd say.
Yeah.
Fair enough. Yeah.
I'm happy to finance the investments, though. Yeah.
You can tell us off air. It's okay.
Yeah. That's awesome. All right, Spencer, if you could give your 20-year-old self any piece of advice, what would you say?
Sure. Probably not much different than what I did growing up, but I'd say, try a lot of things, take some risks, and probably move from your hometown for a little bit, whether that's for a short time or a long time.
Yeah.
I think what happens is we get siloed a little bit into one way of thinking.
Yes.
Whether we stay in the same geographic location or stay around the same people for a long time, whether leaving home or traveling can bring fresh perspectives to people. I didn't move away permanently until I think I was 30 or 31, and coming to Kelowna, having to meet new people. I got here during COVID or just before COVID. So, it definitely had its challenges, and it's probably made me stronger for it, and having to, go out and meet new people and people like yourself.
Good for you.
Yeah. That's great advice. What's your favorite charity, or how do you give back?
Sure. I mean, being with Peakhill, and I've been with them for about a year now, they are always giving back, whether it's through some of their financing initiatives or volunteering with a program called Youth Without Shelter. It's a Toronto-based nonprofit that provides housing and resources to homeless youth. So they funded one of their properties. They've done several volunteer missions, whether it's, serving meals or otherwise to some of their youth there. They've also, worked with the Trellis Society in Calgary. It's a Calgary-based nonprofit that provides accessible and affordable housing for underserved communities. And, through that initiative, they raised over $60,000. We did an employee match program during the holidays this year where, myself and all my other colleagues, we could donate whatever we wanted to any charity within Canada, and the company would match. So, I donated to a local group here. Peakhill matched it, which was very kind of them. And, yeah, so, it's an ongoing thing. We're sponsoring events. We're trying to get involved very locally as well. Even on the business side, it's, sponsoring events with UDI and things like that as well. So we're trying to get very granular and local. And I think people are appreciating that.
Nice. Sounds like a two birds with one stone. You could sponsor the Kelowna Real Estate Podcast. We are also a little bit like a charity sometimes. But,
and we're also speaking directly to your audience. So yeah.
You certainly are. Yeah.
That's awesome, man. That's nice to see like larger companies doing that. If they have the ability, like go after it. So good for you guys.
Yeah, we appreciate that.
How can Taylor or I or our podcast or our listener help you out? What can we do for you?
You know what? Just being here and introducing myself to the community is more than enough.
Yeah.
Happy to get in touch with people as they need to see fit. And yeah, you know what? Like I said, I really like the Kelowna community. I feel like it's very easy to get to know people here and even across BC and Western Canada as well. Sort of doing business all across Western Canada. It's great, but certainly love the local Kelowna community.
Hey, yeah, we should mention you guys have a pretty good newsletter that goes out as well. So if listeners are interested in that, then
yeah, we're trying to keep people updated on what's going on in the industry, and happy to send that out as people need it.
That's awesome.
Right on.
Yeah, thanks a lot, Spencer. It's been a ton of fun.
Appreciate your insight today, and I'd love to have you back on in the future.
Fantastic. Yeah, we'll keep you updated on what we're doing and hopefully be back on maybe a yearly thing.
Yeah, that would be awesome.
Yeah, sounds great.